Welcome to Profiles in Risk with your host, Tony Cañas. And today I have, if you're not watching the video version, you really should for this one. Today we're going to talk about Insurtech and insurance and the effect that coronavirus is having on both. But I want to introduce my guests. First of all, distinguished guest, broker Brett Fulmer, who runs a very interesting small agency or young agency out of Northern California, ran in the most modern way possible out of a briefcase and using lots of technology. And we also have a stranger to the podcast, Nick Lamparelli, Chief Underwriting Officer at Rethought Insurance. And I'm not entirely sure he knows anything about Insurtech, which is the topic today, even though he runs an Insurtech company. But Brett begged for Nick, so we gave in and we'll give him a chance. For those of you that are fans of the longtime fans of the podcast, you might remember him as the guy who recorded the first 180 episodes or so of this podcast. So he's interviewed the great majority of the of the Insurtech world, not the great majority, but he's interviewed a whole bunch, hundreds of founders in the Insurtech world and runs an Insurtech company himself. So Nick's back to today, even though he's not the host. Nowadays, he also runs the podcast for Coverager, which is very, very, very Insurtech focused, needless to say. So welcome, Brett and Nick. How are you guys doing today?
Doing good. Thanks for having me. I'm excited to be on with both you guys. I don't know if we've ever actually done this.
I don't believe we have. I mean, Nick and I have been on many podcasts together, but yeah,
I've been on a lot of podcasts with you, Tony, and I've been on a lot of podcasts with Brett, but I don't think the three of us have been together. So.
Correct. Exactly. And if I missed anything about the introduction of what you guys are doing, so Brett, tell us a little bit about your agency and especially like why you know anything about Insurtech. Because normally I wouldn't invite an agent to come talk about Insurtech.
Yeah, right. A few of us are crossing the picket line a little bit. I'm seeing more brokers at Insurtech events, so that's pretty cool. Right now, learning P&C at Maxwell Agency. I still have my own little kind of Newport Beach Insurance Center, run some Insurtech projects out of, then helping out Fineo. They're up in Canada right now, but with some cool plans. And Tony brought me into the Insurance Nerds Madness, pushed me to write a little bit to help out. And then Nick gave me the opportunity to help with the podcast, which I plan on returning shortly and making some content again. But appreciate you guys. It's been fun, growing up in the industry with you.
Awesome. And Nick, you're a veteran of the industry, and somehow you, during the 2-3 years I've known you, you've walked your way into the Insurtech side of the industry. You've even been mentioned at least once as one of the top 50 Insurtech influencers. So don't know how you did it, but it definitely worked out. And you've successfully ran your own Insurtech for the last how long now?
3+ years. And yeah, how did I become an influencer? I didn't try. I did things that were interesting to me, and I danced to my own music.
I'm glad it worked, and at this point, Rethought is at least middle-aged for an Insurtech.
That's true. Yeah, doesn't feel that way. Still feels like a startup in so many different ways, so many different growing pains. But yeah, when you're around like 3 years and you get past a few funding rounds, it's your survival's pretty much guaranteed. You just have to kind of not screw up, and really the question is, can you thrive? Can you actually execute on what you're trying to execute on? And based off of what we've done in the past couple months, I would say absolutely, because things have been picking up steam, actually, and we're now getting access and introductions to new channels with brokers who are thinking about these problems as creatively as we are. So looking at the nat cat space and just basically saying, wait a minute, why are we doing it this way? Why can we try this? Can we try that? And we just so happen to have the technological platform where we can we can pull that off.
That is fantastic. So you used a word, funding, and I think that's the kind of the big part of the discussion today. So basically, today's topic is the differing impact or the different impact of the coronavirus crisis. Right now, we're recording on April 28th. I have been home for 6.5 weeks now without leaving, and I think most of us have been working from home. Those of us that have the ability to work from home have been working from home for 5-6 weeks now, and the economy out there is, in many ways stopped. We're looking at a major recession / depression, hopefully just recession. So before this happened, like if we had been chatting, or last time any of us recorded a podcast back in December, kind of, and especially Nick, you had very much said this, that insurance and Insurtech were kind of, I don't know if you called it 2.0 or 3.0 or Insurtech 4.0 or something, but they were very much kind of becoming one ecosystem. A lot of talent going from one side to the other, or the sites mixing. Carriers had created what's it called? Not only innovation VPs, but a lot of them also venture arms that were investing in Insurtech for their own use, and even just for a good way to invest their premiums. So everything was kind of coming together, and now this is where I'm really curious: is now during the crisis, will insurance companies and Insurtechs be affected the same way or differently? I think they'll be affected differently, but what do you guys think?
Should I go first, Brett?
Yeah, sure. And we could even chop it up, one side of the camp or the other. And just for me, no direct carrier access, work with a couple startups. So I'm just riffing off of opinion, not fact, for sure.
We would have, like, the CFO to a carrier here. I certainly know a few of them. There's no way their compliance people would let them come here. So so we're left to our own devices.
Well, in the bigger scheme, Tony, what this has shown is that business interruption is a big deal. That was always like the red-headed stepchild of the property coverages. Was always focused on building and content.
It's part of property.
And it's always the one that's sort of gets the least amount of attention.
Interesting.
But
I did not know that. Okay.
Yeah, but what this has shown is just how important business interruption is, and for a lot of businesses, it is their biggest risk. So it doesn't even have to come from a pandemic; it can come from a natural disaster. And so generally, the whispers that I've been hearing are that you're going to have a lot of boards of directors that are going to have very little patience with executive teams that do not button up their business interruption. All you need to do is look at what happened to the airlines. So, boards that represent the shareholders do not want, their businesses to go bankrupt because the businesses were not prepared for whatever natural disaster or future calamity occurs. But I think secondarily, they realize that they need to take more control over this, simply because you can't rely on the government to come in and bail you out. It's too time-consuming, too messy, and the airlines have proven if this happens again and again, they're going to get their chunk of equity. So shareholders are going to get diluted, and there's not a lot of sympathy for shareholders or bondholders when it comes to this sort of stuff. So I think there's going to be a lot of pressure for bond investors, lenders, financial institution boards, equity holders to the executive teams to don't let this happen again. Like, whatever you need to do, whether it's a captive solution, insurance, do whatever it takes to shore up your business interruption to make sure that as these things occur, your business can function. You can survive. I just think that's gonna be huge, and I think the Insurtech impact of this, Tony, from the insurance landscape is this finally provides cover. I saw a cartoon. It might have been Bob Frady that posted it. It said, or no, it was Micah Cooper that said, what was the cause of the great digital transformation in insurance? And it's like box 1, CEO, box 2, CFO, box 3, coronavirus. It's coronavirus. Like this, before this, the CEO had not a tremendous amount of incentive to spend millions of dollars with the risk that comes with spending millions of dollars and not knowing if the tech is going to solve your problem or not. Now with the board pressure and other stakeholder pressure, now it's just like, I got to do it. I have to make those investments and shore this up. The best story I heard was a very large broker, number 1 in residential, top 10, top 5 maybe total in the United States, and it was a disaster getting their employees to work from home. They were not set up at all for it, and it's like, that will not happen again. They will make these investments to make sure that this kind of stuff doesn't happen.
Yeah, I don't know if we ever totally go back to normal. I think 2 to 3 days in the office, 2 to 3 days at home. I think school's actually going to go okay. I think companies have been deployed decently. This is going to change the landscape of risk and how we do business. And my 2 cents on the carriers versus the insurtechs is it kind of forced a growing up period of the insurtechs and looking at fundamental business models. And it's going to kind of thin things out a little bit this year potentially, but VCs look really long-term too. And I imagine this just might divert some more money over towards life and health a little bit, as P&C kind of fixes its business interruption. But.
Yeah. I think, Brett, the InsurTech 2.0 that I was seeing has now changed a little bit. What I'm worried about is there are going to be a lot of InsurTechs that will not survive this. Mm-hmm. They just weren't funded adequately, and the whole landscape of the venture business is that whatever it is it takes for you to be profitable, you're underneath that. You don't want to be profitable early. You want to scale. So you want to kind of burn through cash. And so there are a lot of InsurTechs that are now stuck. They were in scaling mode or whatever, and now they're desperately just trying to survive. I worry about that, but again, it potentially creates another opportunity for other InsurTechs to kind of pick up the pieces of what's left over, or the carriers to come in and gobble them up and make them their own.
Yeah, that's what Tony was saying when we talked potential buying spree right now for carriers.
It's tricky, right? It's tricky. So we were, right hand is the carriers, left hand is InsurTech, right? Left hand's a lot smaller, right? So left, pinky finger versus right hand, and they were starting to integrate, right? The InsurTech was starting to become that 6th finger, right? By the way, you should watch this on video. It makes much more sense that on the audio. Give the example.
I can't tell if that's a middle finger or your pinky finger. What is that?
Okay, so this is my pinky. So the InsurTech was starting to become kind of that 6th finger, right? Weird metaphor that I chose, but who knows? And this, in my opinion, has very different impacts, right? On the carrier side, yeah, this is scary, but carriers are incredibly recession-proof, and they're kind of holding their breath. They're kind of freezing hiring, but they're not laying off people. And ultimately, any good carrier, especially large ones, are sitting on very, 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 very large, like billions of dollars worth of surplus, right? InsurTechs don't have that. No. So on the InsurTech side, by definition, like Nick was explaining, you've got X amount of capital from a venture capital firm or from wherever, and right, startups measure very closely run rate, right? How much they're spending per month, how many months worth of money do we have? At what point do we have to do another funding round? And funding has been fairly easy for the last several years. There's been a lot of money in the market to fund crazy ideas and to fund startups. so now my guess, and again, I know very little about the venture side, but my guess is this scares venture and makes raising funds a lot harder. So, and not only that, but also it potentially it scares carriers. So it makes the already long sales cycle, right? You already have a 2-year sales cycle to sell into a carrier. I think that sales cycle gets longer because the
Potentially,
carriers are scared.
potentially, yeah. It- it- I think it could be multidimensional. So take a typical venture capital firm. The ones that I think will basically hold back are the ones where they have limited partners and they're constantly, it's not their money. It's limited. They're constantly going to limited partners to get the funding to then make the investments.
Okay.
I think those limited partners have, the stock market has taken it on the chin. They may potentially be holding back their investments into these VC firms. I would uh, create a dividing line between that and a lot of these insurance companies that created venture arms. That's not the same thing. It's their money.
Mm-hmm.
It's their capital, and they've already set that capital aside for these investments. And so those firms actually have pressure to make the investments.
You don't think that insurance venture arms get scared and just kind of sit in the sidelines? That was my first guess as to what they would do, just knowing that carriers are conservative and careful.
I do. I don't know. I don't definitively know the answer. The ones that I've worked with, I think they have enough independence that the carrier itself does not have the CEO of XYZ carrier that has a venture arm isn't going to be ringing up the venture arm saying, "Hey, hold off."
Okay.
The CEO may ring them up and say, "What are you doing? What are your plans?" But the capital's sitting there, and so it's meant to be useful. This is the classic Warren Buffett blood on the streets. You want to invest when there's blood on the streets. This is it. Like, this is you want to get good value. This is your opportunity to get good value.
Yeah.
Otherwise, if you wait till this is over, then the valuations go back up and you're not going to get the same pennies on the dollar type of value. So it remains to be seen, Tony. I mean, could a corporation affect its venture arm? Of course it could. I'd be foolish to say it wouldn't. I hope that's not the case. From my experience, and my company is in the middle of a fundraise. The conversations that we have are that no, things might be delayed a little bit just because there's a lot going on around them, family-wise, working from home. So there's just a natural delays in a 24-hour cycle. But no, they have the ability to make the necessary investments. One more thing before Brett comments is there's a lot of retrenching too. So a lot of funds are making sure that the companies they have invested in survive. So that's top priority. Before making any new investments, they want to make sure that they shore up the ones that they currently have in any which way. It could be funding, could be relationships, whatever. So that almost across the board has been, kind of admitted to me by the firms that we talk to, are that they got to make sure that their house is in order before they start, bringing on more people to their ship.
Okay, so basically, very very first like angel level, like first level funding, probably harder right now. Right, if you've been bootstrapping your Insurtech, or you were still working your job and you had an idea, you were shopping around, harder. If you already have backers, if you already have venture capital, they don't want you to fail. Okay, that makes a lot of sense, and this is why such a benefit having you here, where you've gone through it, right? I have not tried to get funding for an Insurtech, which I know took you a couple of years to find. So it's good to hear, like, since you've gone through it and you're actively talking to venture?
Yeah, I think it's super interesting. The money doesn't want to stay idle, and they see a digital transition. I could see carriers being aggressive and investing towards things on how the world's gonna look, and people not being afraid to sort of place money into opportunities that make sense with what happened. If anything, money for new funds would be tough because the stock market was so much cheaper, and I could see people gravitating towards, discounted stocks, instead of 10-year venture investments. But yeah, like Nick said, they want to keep the winners alive. I've kind of looked at the whole thing as like a pause. Like no infrastructure was lost. This wasn't a war. We kind of have to like hit pause on life and society for a minute. But when we get to turn the switch back on, it'll be a new normal, and there'll just be certain things that are succeeding in that new normal. And I think they're trying to, I could see intelligent money trying to place bets around, the transitions that we'll probably see.
Okay, this is interesting.
I think new normal is the right word. I mean, I just think all across the board, Tony, from life to, I don't want to comment about health. I know very little about it. Life, P&C. On my podcast, I interviewed Dr. Shar Hugh and Christina Newbrow of the Helper Bees, and they're on the long-term care side that blends over into workers' comp. There's this very unique opportunity. I hope what Brett said is correct. I hope that there's the carriers view this as the opportunity finally, because they're going to get pressure from the board. So, is it the situation where it's like, okay, well, let's buy stuff from Microsoft, or is it, let's get something that's specific for us, or let's buy the whole thing and own it and give us a competitive edge? Like, this is their unique opportunity, because the new normal is here. Like, Brett, I don't even know if it'll be, 2 days at home and 3 days at the office. We don't even know what an office environment is going to look like. Take a city, take things like New York City. How many people are going to rush to want to go back to their office in New York City? It could be years before you get back to something like that. So I think it is the new normal. I think your workforce is going to have to be digitized. Therefore, your entire business workflow has to be digitized. What does that mean for your company? What does that mean for your investments? Brett, you're on the broker side. How are you going to meet customers?
Yeah, I honestly feel like it's sort of stocking up. I've had the problem so far of just working on random little accounts. And personally, I feel like this is time to create content, figure out what niche I want. I probably won't talk into the niche. I have an idea here. I'll tell you offline, Nick. But I consider this like
don't give away your secrets.
Yeah. And what was in the pipeline, what renewals we had, it's pretty much business as usual to a degree, small degree. But yeah, net new has been really challenging right now. Nobody really knows what decisions to make. That was kind of somewhat expected.
Yeah, new business right now is very hard for insurance agents, for you name it. Like definitely hard. Talent. So I come from the talent side. I've always been passionate about helping people grow within insurance, and for the last 2 years, I've been working on the talent side, selling staffing services to insurance carriers, I've advised a lot of people even before I started working in the staffing side of insurance, and I've had a lot of conversations, especially last year, with people in insurance, and we're talking like higher level, like directors and VP level people in insurance, flirting with the idea of going into Insurtech, right? And Insurtech had also, I don't know, a few years ago, they weren't interested in insurance talent. From my perspective, only coding talent, and they had last year come to the point where they seemed interested in insurance talent. They had realized that right, really understanding how the sausage is made is important in order to improve it and automate it and all that, right? I wonder if Insurtechs are going to have a harder time getting experienced talent, right? If you're the executive that's been at a carrier for 15 years and you're getting tempted to go and maybe get equity and stuff, I wonder if this is the thing that reminds you of the safety you have, right? What do you guys think?
Right.
Yeah, I could totally see it. I don't know, it's just showing the vulnerability of startups versus the legacy of a carrier, and I think that's for the majority of it. It is a pretty risk averse community. You naturally overthink things and you hedge bets in our world. But that quarter of them might see the tremendous opportunity that's opening up for a world that just did a quick move. So I think, the crowd is the crowd. Most people are going to stay where they are. Most people are going to get scared. Most people aren't going to jump on the new opportunity. But I think there'll be some enterprising people who aren't scared off by the tumultuous waters and maybe see big startups that came out of 2009, 2010 and think there could be opportunities now too.
Yeah, I think I pretty much agree with that. I would be lying to you if I didn't tell you in the last 3 years with my startup that I hadn't been, either a little bit envious or wondering if I had made a mistake, because that is one thing that is kind of shown through this pandemic, I think, is insurance is a really stable business, right? And that safety could mean a lot. And so I would be lying if I didn't tell you just in the last 3 years, like, I wonder where I would have been if I had just stayed. And that has been amplified in this pandemic. But I don't know. I would say more likely than not, I think talent-wise, if I were a betting person, more folks from industry would be less likely to want to go to Insurtech because it's riskier, and I think the safety aspect of the industry and your career has shown through. Like and Tony, this is what we've been preaching for years, right?
Exactly.
Which
it
is
happened in 2009 and now super stable.
You want a career that's going to last a potential lifetime. We've been preaching to young professionals like Brett. When neophyte Brett come in, you can have a 40-year career here. That's where the dynamics of this are kind of playing out, and it's been proven. So I can't begrudge anyone that wants to do that. So yeah, there'll be a few I think that will make the leap. They're probably just naturally more risk takers. They're tired of dealing with bosses. So
I kind of just want to comment too, Nick, being around a startup, there's definitely some dark nights of the soul, definitely some stuff you push through, but that's just the chaos of creating something kind of net new out of nothing, being in the creative space. So there's highs and lows, but it's kind of like an irreplaceable journey. And then just to your guys' credit, I was licensed 6 years ago, probably connected with Tony 3 or 4, maybe 3 years ago, and just the way the insurance nerds communities kind of came around me and the way we've helped each other out or promote each other, it's pretty unique. I can't think of any other job class where people who don't have an investment in their fiscal upside or whatever else would help each other out, share ideas, and create good. It's pretty cool, obviously.
I think that there is a how do I put it? If you went into investment banking, you probably spent your whole childhood planning on it, right? You're raised for it, and it's an incredibly competitive world. And in insurance, so it's hard to create a community of investment bankers to support each other because you're competing with each other and you've worked your butt off to get there, and you've had kind of a step-by-step plan your whole life. You went to college knowing exactly what you had to do, got your MBA knowing exactly what you had to do. In insurance, we all fell into it by accident, right? And little by little, cobbled together a network to figure out how to grow. So and what we do is help people, and that's what insurance does. So you just end up with the island of misfit toys. We've all needed the help because we didn't go to school for this. There was no guidance on how to do this.
Yeah. A unique aspect of insurance is take workers' compensation, for instance. There may be some proprietary stuff here or there, but for the most part, there's not a company out there that could take it all. right? There's no proprietary information that you can get in workers' comp that's going to let you monopolize the market. The biggest thing that we have in terms of a monopoly would be like, I don't know, State Farm in auto or something like that. The rest of it is spread out. Why is it so spread out? Because the opportunity is so ginormous that not one company can take it all.
It's
so
diverse.
there's this opportunity for me. I can help Brett. I can help you, Tony. I talk to competitors of ours on the flood side, and I can talk shop with them. Why? Because there's plenty. The pie is gigantic. Like there's plenty for all of us here, and it's going to take all of us to do our social good, which is, providing that risk transfer mechanism to get people back on their feet. It takes a lot of capital. It takes a lot of investment in time and all of that. And so I think that's the one thing that's really unique versus like, institutional management or whatever, where everyone's guarded, it's cutthroat business, back and forth. Every little basis point makes a difference in your business model. Insurance is inherently a different animal.
It's an interesting one. What else would you guys guess that we'll see in the Insurtech side this year that we would not have seen had it been for the if we had not had the crisis?
I think the traditional guys are going to get more comfortable with the Insurtech tools. Not a plug, no real association, just sold some of it. But like I have a cover wallet button on my website, somebody could rate and buy their own insurance. I just think there'll be more openness from the traditional side to using a HIPPO, or something like that as they're working on their digital innovation.
Yeah, I believe that. I look at what, Bob Frady does at Hazard Hub, and I see nothing that's going to slow that down. I think there'll be more of a willingness to operate with companies like that. The thing I'm most concerned about, Tony, is the ability to network and market your idea has dramatically changed. With no events, no ability, how you generate leads is now completely different. So you weren't on the call, Brett was on the call, but we had there were like 12, 15 people on that call this afternoon, Brett, on how to reimagine the conference. How do we do that? Like there probably will not be another one this year. So some have taken those offline and done online and done those virtually. It's not the same thing. And so we had this particular call to try to brainstorm ideas on what can we do. And that gets to, if you are on the initial stages of your Insurtech startup, how do you generate leads? Is it all LinkedIn? Will that work? Like, one of the benefits of conferences and events is it got you exposure. You could present, you could talk about your solution, you can get in front of hundreds of people and then also network with them. That is now lost, and I am a little bit concerned that without that ability to generate leads, and when I say generate leads, not necessarily customers, I mean like Insurtech to carrier, Insurtech to reinsure, Insurtech to broker, Insurtech to other buyer. How do you get in front of them when these people are like nebulous? Who's the buyer at State Farm?
I haven't sold to that top tier, but my only kind of words of encouragement on it, besides a broker brews I hosted before ITC one time, I've never been to a conference. I've been bootstrapped the whole time. So really it was insurance nerds, LinkedIn and Twitter has built out my whole network. So hopefully other people explore those channels. But I hear you, Nick, it's hard to replace the in-person. I always say in person you can build a relationship, but what would take a year digitally or over the phone or over Zoom, it's just a different feel.
It's a different feel. The work from home has shown this. So, there are times where I'm more productive working at home, and I've been working from home for years now. So I'm really used to it. I can work 10, 12 hours a day because I'm eating lunch at my desk, I'm eating breakfast at my desk, sometimes I'm eating dinner at my desk, I'm working on the weekends. It's easy to do, but then we have in-person collaboration meetings. And it's like you cannot replace those. Like it's just so valuable. You get weeks worth of work all done in a day or two.
Mm-hmm.
How do you balance that? So the conference, you get that face to face, but there were flaws in the conference model as well. And so I think the Insurtechs, Tony, are going to have to get a little bit more creative. And I hate to tout articles that I've written on Insurance Nerds from years ago, but you are a salesperson whether you like it or not,
That was
whether you
like your
want to be or
second
not,
article ever.
something like that. But
Yeah,
you
that was like the first article after the introduction to CAD modeling.
So if you're listening to this or you're watching, like, you have to get more creative in your marketing. And that might mean a little bit of everything. Might mean what Brett was talking about. Being active on Twitter, being the thought leader, being active on LinkedIn, creating your own YouTube videos, creating your own webinars, engaging in other stuff. I think the insurance nerds community will, rise to the occasion and create that stuff. Lance Poole of Juniper has been doing a poker tournament. The first one, he struggled to kind of get all the seats filled. The second one was immediately all the seats were filled. I couldn't even get in, right? And so I could really envision, Brett, I was talking about this on the collaboration call, like this, young professionals, Tony, tell me if I'm wrong. Young professionals are really comfortable with a headset on, playing video games, talking to other people. Why can't they do that in a networked environment with business professionals? I don't understand whether it's poker or some sort of video game where they have a headset off, they can play a game and then network a little bit and then go play some more games and have an environment like that. I think we will rise to the occasion, but it's I'm worried about how Insurtechs are going to be able to connect with the necessary stakeholders they're going to need.
Well, and sorry, just to hop in real quick, because I've been on Ask Kodiak's trivia afternoon thing too and had some fun with Fineo. There's a good opportunity right now if people want to establish themselves as leaders to try to create community, to try to do some digital versions of what we might do in real life. I've been doing a broker brews. Usually I'd hang with my guys in Orange County, but we've hopped on video, and that's the one that inspired to reach out to some Insurtech friends too. But yeah, it's a change. It's a sea change. And if people want to create online events, be helpful, promote community, I think it's a good way to establish yourself as a leader right now. It takes a little bit of boldness, but go for it.
I had an idea for Insurance Jeopardy, but it just seemed like a lot of work.
But Brett, it's literally been on the schedule for back when we had Insurance Nerds Day the first time, and somehow it never actually makes it into reality.
So I will tell you how far I've taken Insurance Jeopardy. I actually found the technology to be able to pull it off, and I was actually already building like categories and different layers of questions for that, and then it didn't quite work out. But I just stuff like that where it's like fun and engaging, and you can learn something. It's gonna have to be a lot of different ways. But I look at young people now. My nephew just plays video games all day long with his headset on. It's equivalent to us going to the ball field to play baseball all day. That's how they're engaging. So what's the equivalent for business professionals? I think there's not a lot of currency for these webinars or whatever. I think they're running out of steam. These Zoom meetings, they're okay. They're running out of steam too. We've got to have a little bit more because, I'm getting tired of complaining about, having my wife cut my hair.
Make peace with it. Go long.
Oh, I went long. She just cut it. You should see the back. Ooh.
Just let it grow. Let the mullet come out.
I looked like Bozo the Clown the way it was coming out on the side. Actually, I did a little thing with Amber this weekend. Had poor lighting, poor setup. Hair hadn't been cut. I'm not even sure I showered that morning, and I looked like a serial killer.
So, are you going to be in and of course I can't think of the name, tomorrow morning, their weekly video? Are you going to be in the insurance nerdery this week? Is that what you're saying? Or was this a bold penguin
I think it was the bold
thing?
penguin thing. Yeah.
Oh, okay.
Yeah.
Gotcha.
So yeah, I was a serial killer. I looked like I was dialing in from my basement.
I want to make Florida jokes, but it's not cool. Yeah.
Oh yeah. Nick's in Florida now, so yeah. Now every time I see the Adventures of Florida Man, I'm gonna know exactly who it is now. Okay, well, thank you guys. This one was different than I expected. Like you guys brought up some points I had not thought of. I really thought that Insurtech would be seriously hurt by trouble getting funding and trouble selling, but you guys have changed my mind that some will, but it makes intuitive sense what you're saying, that if you already have funding and you already have something close to clients, you'll should be okay. So that's good to hear. I thought we would be seeing 2,000 Insurtechs at the beginning of the year, 600 at the end.
We'll have to wait to find out. We could be completely wrong about this, and it could be a complete disaster. There's the optimist in us as well, that we've seen some of these companies, we know some of these people. I want them to survive. I think it's important that they survive. Man, if we're having this conversation a year from now and it didn't kind of work out that way, it'd be a real bummer.
We could set a recap in 6 months. We'll try to make a mental note. We'll try to circle back.
I would just say, like, if you for those that are listening, if you do get the Coverager email, I think they're doing a phenomenal job covering this and what's happening, keeping track of which companies are laying off, and creating a database around that. That could be the necessary the KPI that you measure to see what the health of these companies are in the industry.
They quick plug on those guys. They did a great investment report yesterday too that talked about March this year versus last year, and was a good little temperature check.
Yeah. Coverager is damn good at reporting and analyzing what's going on in Insurtech. I've always told people that. So, and it breaks my heart, or it kills me, how I've asked rooms of actuaries at a conference, or rooms of traditional insurance professionals at a conference, like, raise your hand if you subscribe to Coverager, and very few raise their hands. And I'm like, oh my God, are you people paying attention at all to what's going on in the Insurtech side? What the?
The bummer.
But yeah, it's the Sheffy does a fantastic job, and I'm sure now a whole team behind her. But just a fantastic job. And Nick runs their podcast now, so if you're annoyed with my voice and you miss his, make sure you subscribe to their podcast too. Now you get twice as much insurance nerdiness under different brands, so it's a win for the industry.
Mm-hmm.
So thank you guys for joining me today, and
thank you.
Hopefully you are right, and we don't see a extinction event for a large percentage of the Insurtechs.
Yeah. Thanks, everyone.
Thanks, guys.
Thank you.
Later.